A very good evening to all the participants. On behalf of the SIRC, we welcome you all for this study circle on three important standards. For the past 3 days, we've been coming across a lot of standards. We started with 315 and then we moved to yesterday, it was 402. And today we are going to another three important standards, which are the only three standards in the 600 series. And of course, which takes a lot of relevance these days again. XA 600, which talks about using the work of another auditor. SA 610, which has become very, very crucial now, when, especially for statutory auditors, when we rely on the work of the internal auditors, especially for control testing aspects and all those things. And also after section 138 coming into picture, we place more reliance on SA 610. So what extent are we testing? That is one another thing with SA 610. Another crucial standard, the SA 620, where there is an involvement of auditors, experts. So all the three standards are very, very crucial these days. And today we have with us an expert with us who's going to give us insights on these three standards. Today we have with us CA Raghuram, a chartered accountant with over 20 years of experience in industry and profession. He's a rank holder in CA final and currently a partner with BSR & Co in Chennai. He has varied experience auditing large multinational companies and Indian-based companies in various sectors, including automotive technology and BFC, etc. He specializes in audit of international GAAP reporting, including IFRS and the US GAAP. He conducts training sessions to his clients and also speaks in various seminars and forums. With this words, I welcome CA Raghuram to kindly address the members. Sir, the session is over to you. Due to some technical snag, his video is not on, so he is joining us from his mobile. So his audio will be useful. Sir, over to you.
Thank you so much. Thank you so much, Sarvajit. And good evening, everybody. Thanks for joining the session. It's my privilege to be here and a pleasure as well to discuss with all of you and take these three topics for today's discussion. As it was outlined, these three topics and sessions are very unique and very important also in one manner of speaking. Very unique because many of the topics which were run through in the past week on the 300 series or the 400 series or even the 700 series are all talking about how an auditor should essentially audit a financial statement, starting from determining a materiality, planning of an audit, going through walkthroughs, control testing, substantive, estimates, and there'll be discussions on how one should look at related party, going concern, very specific topics. And of course, the 700 talks series talks about audit report, etc. The 600 series is very unique because here there is nothing which one has to do by himself on his file, but there are a lot of things one has to really do looking at what others are doing, and that is gaining a lot of importance. And also there is equally a lot of onus and responsibility on us as auditors as we do this. So there are three standards. Of course, we will take through each one of them. 610 being the longest one, so we'll spend more time on that. These three standards have a context. 600 is one which talks about using the work of another auditor. 610 is using the work of internal auditors, and 620 is using the work of experts. So now what is very important and critical in the entire three standards is that what is that the auditor has to do, what is that he has to really do while taking these measures in terms of looking at others' work, what he should be relying on, how should his documentation be, when he can rely, what he can't rely, and a lot of things which we will take you through. Okay, so let's move on to the next slide, and we will talk through more importantly first on SA 600. I'm not too sure if the screen is visible to all of you. Is it visible, right?
It's visible, sir. I'm sharing the screen. Yeah.
Okay, very good. Thank you so much. Okay, so the entire session, what we will do is we'll first talk through initially what is the purpose of that standard and what are the key terms which one should know and what an auditor should do. That's the entire approach we will take through the sessions. And in between, we'll take a break after an hour and a half and have some questions. lined up, and we can have those interactive sessions, and then from there take it forward to the next level. Okay, on 600, using the work of another auditor, this is something which we would have generally seen and used very typically in the Indian scenario and context in a console financial statements. When we are the auditors of the parent company, we will have to audit the subsidiaries and joint ventures. In some situations, those subsidiaries and joint venture will either be within India or outside of India, and in those cases we go back to those auditors in case we don't audit them and ask them to audit and give us the report. And in the Indian context, we also draw reference in our main audit report by saying that we do not audit the so much number of subsidiaries, JVs, etc. And we also quantify in the audit report the revenues, the assets, the overall total net assets, and also the cash flows emanating from those specific entities or components, as we call. This is a very unique practice I want to point out, which happens only in the Indian scenario. The reason I say that is because globally, when you look at it, we have similar standards of SA 600, wherein while the principal auditor, which is the main auditor, he uses the work of other auditor, but finally he is responsible to the stakeholders. But in India, there are situations where possibly we could to some extent carve it out and mention in the audit report in terms of our reliance or otherwise on the work of the other auditor. But having said that apart, therefore this standard brings into definition of three topics or three key points which one should be aware of. One, who is a principal auditor? And therefore the next question is, who is other auditor? And third is, what is a component? Okay, so essentially if you read the definition on the screen, a principal auditor would essentially be the one who is responsible for ultimately reporting on the financial statements of the company. And that company ideally would have various components, and we'll go ahead to see what components are, and they'll have various components, and he would be the ultimate auditor who is responsible for reporting on that entity. Now the other auditor means that auditor with whom the principal auditor is working along with for the other auditor to audit a component. To give a simple example, if I am auditing as a principal auditor the parent company, then there is a subsidiary which is being audited by another auditor. He will be termed as other auditor under the standard, and I will be termed as a principal auditor. This is quite easy and simple to understand. The most important critical thing in this is component. So what is a component? In a very easier way, a subsidiary or a branch or a JV is a component. But what one needs to also understand is that there is also a concept called multi-location. For example, there are various factories for one company, or each factories also being capable of being called as a component is a question. Or there could be various branches a company could have across. Therefore, I will audit some branch, other party will audit some branch. And can I call the other guy as other auditor, and can I call myself as a principal auditor is another interesting question one has to think. So therefore, deciding on as to who is a component in the entire scheme of things within entity is very important, and that is something which one has to really look through and decide very carefully, because that really determines whether it can be called a component. And only when we call it as a component, then you can involve the standard of other auditor being able to report on that component to the principal auditor. So in my example, if there are multiple branches and I audit 50 of them, the other guy audits 40 of them, typically it may not be another auditor, principal auditor, it could even be called as joint audit, because then both jointly takes responsibilities. So there is a very subtle and very different distinction in the way one looks at joint audit and a component audit. And in the component audit also, there could be situations where there are various factories, as I mentioned as examples. So in that scenario, typically, while there are some slides which we'll talk through, those factories may not fit into the definition of a component. We'll see why it is later, and therefore they may not be called component, and the principal auditor has to audit them in a different methodology. We'll move on to the next slide. Okay. Now, now the other bigger question one should really look at is that, am I the principal auditor? Okay. Why is this question very relevant? Because the example I also told is that I am the auditor of the parent company, right? And therefore, I would presume that I am the principal auditor and subsidiary auditors are all other auditors. But let's take an example where the parent company is possibly a shell company or an investment company with little operations, and the entire operations happen in subsidiary. While I sign the parent company financial statements, can I really call myself the principal auditor is a big question, because the principal auditor is one who would typically audit substantial portion of the entire component of the group, and he has a very good understanding of the business of the entire group, and also understands the risk of material misstatement which will happen in a component. In example where I am the auditor of only an investment company and various businesses are happening on the subsidiaries level, logically I may not be able to be called as a principal auditor, and therefore in that situation the subsidiary auditor could actually become a principal auditor while I could be called as a component auditor. So there could be some amount of swap happening, but one has to be careful and not assume that just because I am auditing the parent company, I become the principal auditor. That may not be the case always. One has to be really careful about it. Now comes the question in terms of coordination and collaboration. In a typical situation in India, what happens is that the subsidiary company finishes its audit, the auditors give audit report, we take that audit report, look through, and then if it is fine, we add up the financial statements. But is that all what one needs to do by applying the standard? Answer is perhaps no. The standard requires us to do slightly things more and things in detail. So we'll go through that as to what the standard requires us to do. Okay, the first thing is that if I am a principal auditor and there is a component auditor, irrespective of the fact that he issues an audit report to the company as an audit opinion, I will have to issue a communication to him called, either it could be an instruction or a group audit instruction, whatever we may want to call, but an instruction to him as to what all I expect. That could include matters surrounding independence, that could of him, that could include matters surrounding his observations, his materiality determination, so on and so forth. And the other auditor has to look through all of that and has to respond back to me as a principal auditor, and that becomes a very crucial audit evidence for me from a documentation perspective on my file when I use the work of other auditor. So it is not a simplistic situation of just getting the audit report of the subsidiary alone. It is much beyond that in terms of seeking and sending instructions and getting responses to those specifically. And equally, that while this is a responsibility of the principal auditor, there is also equally responsibility at the end of the other auditor, where if he has some immediate significant findings, he has to inform it well ahead of time. It shouldn't be a situation where a day before the board meeting or audit committee meeting, the subsidiary or the component auditor comes and reports to the principal auditor that he has so and so findings, and therefore these could be potential issues in the company. That is something that could be a bit of problem, and therefore a good collaboration and coordination is required between these two, and that has to be set upfront, laid out within discussions with the management and also the company at large. In many situations, we have seen that the principal auditors also send a very detailed questionnaire on all topics which he may want answer upon, as to how did this component auditor go about auditing key captions, how did he address significant risk in the company, what was his basis for determining risk of material misstatements on a particular significant account, what was his conclusion on significant account. He can ask those information, and it is the duty of the other auditor to respond back to the principal auditor. Okay, let's move on to the next slide. Okay, as I possibly alluded to this initially, within India, the general scheme of things is that the principal auditor would not be responsible in respect of the work which is given to other auditor. But however, if he believes that the other auditor is not doing the work which needs to be done in terms of depth, in terms of knowledge, or in terms of assessment of competency, then the principal auditor will be held accountable. And therefore, this is very critical and crucial that as principal auditors, we should document in our files and records as to our assessment of capability, competency of the other auditor by asking those relevant questions, seeking confirmations, independence, his competency levels, and all of that, which would really be a good basis for us to prove that we have done our job as principal auditor. The second most important thing in the audit report, of course, we will have to call out as to number of companies which we have relied upon in terms of number of subsidiaries, etc. And also we should call out the total values of assets, revenue, so on and so forth, as we spoke. So with this, one has to just keep in back of their mind in terms of what essentially is the work which has to be relied upon and what is that which he cannot. And typically in an Indian context, as I said, the principal auditor is not responsible. But if you go beyond the borders of India, internationally, the principal auditors are responsible for whatever opinion he has received from the other auditor, and it does not absolve him of any risks or otherwise. Yeah, let's move to the next slide. Okay. Now, I was mentioning to you about one important point of a component audit and a multi-location audit some time back, right? So what is a component? And I said possibly we'll come back. Maybe this slide will give you a good definition of what a component is. Essentially, it is very easy in case when we have a subsidiary, joint venture, a branch, to call them component. But the most important thing one has to really understand is that as a component, it involves various assessments in terms of assigning materiality, in terms of scoping of some of the components as material or not material. For example, as a principal auditor, I can say that if my holding company and 5 subsidiaries are able to give about 95-96%, I'm just giving a number, of revenue assurance by audit, I can actually scope out some of the components which are very small, but there could be some 4 or 5 subsidiaries which may not be relevant, and I need not choose to audit them also. So that is the advantage of doing a scoping exercise in a component audit and then sending instructions to only those components and auditors of those components which are relevant and material to the overall perspective of the audit at the parent level. When one looks at a multiple location level, that may not be the situation, because multiple locations will have very discrete information, and therefore substantially in that situation the principal auditor performs the work, because the controls in those situations will generally be homogeneous and not heterogeneous, and therefore it is easier for the principal auditor to apply his own level of test and balances on those components. Let's move to the next slide. Okay, now therefore the question which I was getting to as to how do we easily distinguish a component and a location, you will see some indicators on the slides. So typically someone which has got a separate financial statement, separate legal entity, and equity method accounting, which is the joint venture and associate, or separate management, or generally components. But if there is going to be a particular location which does not have the entire cycle with it, or doesn't have the entire process to it, then they are incomplete, and therefore they will not be called as component. So I give an example of a factory, right? So if there are some 5 factories and a production happens there and sales happens there, but the procurement is centralized in head office, or payments are centralized in head office. So some activities are done at head office or in some other place, and some activities are done in the respective factories and branches, and therefore they are not in entirety one single structure of trial balance, and therefore they will not be fitting into definition of a component, and they'll be a location, and therefore applying the standard may not be appropriate in those situations, and one has to look at those very differently. So one has to distinguish that in that context. Okay, let's move to the next slide. I'm not too sure if I'm able to read the example. I'll read out the example here for you, just to distinguish and understand what is what. So a store of a food retailer are incorporated in separate legal entities in 10 different states in India, say for tax purposes, essentially GST. Each entity shares the same management team and a central financial reporting system for the purpose of preparing a consolidated financial statements of the retailer. There is a functionality to track which entity information is for tax purposes. Most of the audit procedures are performed by the central lead engagement team at the head office. And in this situation, the question is whether it is a multi-location or whether it is a component. I think based on what we discussed now, it will be easy for you to conclude that this is more a multi-location kind of audit and not necessarily a group audit or a component audit. And therefore, one has to be very careful in applying these standards in those situations. Let's move on to the next slide. There will be one more example very differently. Let's take a consulting company where there is a head office, but of course they have branches in 10 major cities. But each branch operates independently. There is a management team. They have their own cash flows and they only report to corporate office. Then in this situation, while even though each entity is a branch, but they're only a consulting company, but since they have their own set of team to operate, which is responsible for delivery, you could possibly conclude that they are components. And therefore, in those situations, if some other auditor audits some of the components, you could use his work and then refer it back in our audit report as well. So that's a distinction one has to really look at in terms of using the work of another auditor, either in the component level or at a multi-location level. Okay, so that pretty much summarizes what SA 600 talks about. It's a very simple, straightforward standard. Very key point to drive here is to determine what is a component and not stop at only getting the financial statements, audit reports of that company onto our files. More than that, we should have inquiries. We should have discussions with the component or with the other auditor. We should have communications, instructions sent to them. We should send questionnaires, get those responses back, and as principal auditor be satisfied that the work has been done appropriately at that level. And that is very, very critical and one message which I thought we should share with the larger team. Now let us go to the next standard, which is slightly a bit longer, which is essentially using the work of internal auditors. Possibly after this standard, I'll take a break and take some questions, and then we could go on to the next one, which is experts. Okay, stepping back and thinking, what is the purpose of this standard? This is a standard which actually will bring lot of efficiency for all of us when we audit financial statements, because we would not have used the work of internal auditors, or we would not have used them directly to assist us in many situations. What typically happens in a normal situation when we audit is that we go to a client and we also ask the company and or the management to share a copy of the internal audit report. So we will go through the report, understand what are all the observations, and see the impact of that on my audit. That is a basic step which we should do, and I'm sure all of us will be doing that. And therefore, we will take into cognizant the outcome of the internal audit report findings in identifying and assessing the ROMM, which is the risk of material misstatements, or even identifying any significant risk or risk of failures when we go and audit any significant account within our own balances. So while we do that, there are a lot of other things also which we can do by using the work of the internal auditors. So let us understand the purpose of the standard. So if you look at this standard very clearly applies only if the company has an internal audit function. It does not, many companies may not have an internal audit function, and therefore this standard is not of relevance. Only if the company has an internal audit function, then this standard applies. This standard also will not apply if the responsibilities and activities of the function are not relevant to the audit. For example, they could have internal audit function, but the function would be focused on improving revenues, quality parameters, assessing the risk on operational flow, etc. They are not relevant to the context of a financial reporting. And therefore, if there are internal audit functions which are directly relevant to the financial reporting, only those are important and relevant. And this standard also does not explicitly reduce any work of the auditor, but it also helps the auditor to derive a lot of comfort and therefore change his method, nature and timing and work performed and the extent of the work he performs to conclude on his audit. Now, unlike previous standard SA 600, here SA 610 is slightly different. Here, the auditor has a sole responsibility for the issuing the opinion. He cannot draw a reference of any of the work which he has relied upon on the internal auditor in his audit report. You may ask that reading a report is not reliance. Actually, answer is no. Actually, we can place reliance on his work and reduce our work a lot, which I will go through in the next slides. But even if we do that, we will not be able to bring it out in an audit report. We have to take ultimate responsibility for this. Okay, so let's go to the next slide. With that, let us understand and define and see what is an internal audit function and what is the definition of something called direct assistance. So to just step back and keep it simple, an internal audit function is essentially what we spoke in terms of a function which the company has in terms of deriving activities which are designed to evaluate, improve the effectiveness of the entity's governance, risk management and the internal control processes. Okay, I will take you through this definition in slightly more detail in the next slide. You'll be able to appreciate it better. And also the direct assistant piece, I'll possibly take you to the example. So maybe you can go to next slide and then come back here later. Okay, so if you look at this slide, you will see what constitutes an internal audit function. So internal audit function is essentially not only situations where the company has an internal auditor appointed on the roles of company. It could also be a situation where concurrent audit is performed. It is also a part of internal audit function. If there's a third-party service provider, which is essentially another audit firm, which is fully outsourced, and they perform the internal audit for the company, even that comes under definition of internal audit function. Or if it's going to be MNC company, there is going to be an internal audit function at a global level, and they are overseeing the internal audit of the subsidiary in India. That also comes under definition of internal audit function. While all of this is not written in the standard, I'm trying to keep it simple through a chart in terms of telling the scope and definition of an internal audit function is slightly far bigger. Now, what can we do as external auditors? Okay, you could see 3 points below, right? First, consider the work performed. Number 2, use the work performed. Number 3, provide direct assistance. Okay, consider the work performed is what we spoke some time back. That what typically we do, we get a copy of the internal audit report, look through the observations and findings, and take any impact of that in our overall risk assessment when we do our audit. That is what we generally do. The second is use the work performed. So what does it mean? Essentially, what it means is that we can actually use if the work of internal auditor to some extent and need not perform those work from our end if we are comfortable that the internal auditor has done the right job and we are able to assess some of the matters which I will talk through in the next slide, and we are able to re-perform some of those work of his and get the comfort that he has done a proper job. So for example, let us take a case of a company where there is a caption called expenses, right? All the routine expenses which the company incurs, and it is a non-significant risk kind of item where the risk of material misstatement is also low. Let us take that situation, and the internal auditor has done a detailed test of control, sampling, etc. If we fit all the other definitions, we can go back, look at his work papers, get those work papers. If you are comfortable, we can rely on that, and we need not do that work from our end. So that is going to be a very good efficiency which we can build in our own audit process by not doing all the work if it has already been performed by the internal auditor. So that is use the work performed. The third one is providing direct assistance. What does it mean? For example, if I want the internal audit function to help me and assist me in performing some audit of some captions, I can easily do that, take their help, get them to audit, and use that as my audit observations and conclude on my own overall audit findings. So internal audit function, to just step back, is not only a function which we can rely as auditors for the purpose of just looking at their reports. We can use their work, reduce our work. We can use their people and reduce our own people. So that is the power of this standard in terms of what we could do by leveraging the work of internal auditors. Let's move to the next slide. Okay. So what is that we have to do before that? We cannot just apply the standard just like that in all situations, right? So the SA 610 lays down some specific guidelines in terms of what all we should be doing before that. For example, the easiest thing is we should ensure that the competency of the internal audit function of the company is adequate, because if they have incomplete team and they have not done a proper work, then our reliance will be a risk for us. So first important thing is competence. Second, how is the internal audit function within the organization? Is it independent? What is the status of that within their own scheme of things? Are they very objective, or they just tick the box? So that assessment we'll have to do, and we have to be very clear that they are an independent team and therefore we can rely on their work. Third, what are the quality parameters of the internal audit team? Are they systematic? Do they have a proper disciplined approach? When I mean disciplined approach, whether they do a proper cycle, they do proper process study, they do a proper assessment of everything, etc. And of course, we cannot use the internal audit function if there's a lack of competency. Okay. The other most important thing is that we should communicate to those charged with governance, which essentially is the audit committee or the management or the board, if we are going to rely on their work. And that is typically done practically through our engagement letter, where we specifically mention that we will have conversation with internal auditors, and if found competent and found relevant, we will use their work and we will also plan their work accordingly. This communication has to mandatorily go from the auditor to the company. Okay, let's move on to the next slide. Now the next question is, if this standard is going to give us a long rope by saying that yes, you could use their work and reduce your work, can I do that for all the areas and all the captions and therefore do nothing about it? The answer is no. So if you see here, it will say that we should use less of the internal audit work in some areas. Essentially, to summarize it in a very practical way, whichever area involves judgment, estimate, and there is a risk involved, those areas should be audited by statutory auditor. Whichever area has got a higher level of ROMM, the risk of material misstatement, and for those assertions, and which are very significant, those should be audited by statutory auditor. Okay, the other 2 points, of course, we have seen in terms of competency, etc. But from a pure caption perspective, these 2 areas ideally cannot be therefore outsourced. So what can be outsourced? Wherever there is a routine transaction, wherever there is a ROMM which is very low, wherever assessments are very less. For example, we'll come to some of the examples in the next slide. Those are the areas where we can actually outsource. When I mean outsource, rely on the work of the internal auditor, reperform some of those work to satisfy ourselves and not do entire check, and therefore be efficient about the entire audit process. Okay, so let us now see how do we use the work of the internal audit process. So let's move on to the next slide. So if you see this, what is required of us, okay, is that the team shall perform sufficient audit procedures on the work of the internal auditor. So what should we be doing? So let us take the example what I already told, that expenses is a key part in a company where the ROMM is low, and therefore we choose to rely on the work of internal auditor. Now we will have to seek the work paper of the internal auditors, and we'll have to see whether they have done a proper work, whether planning is proper, whether they have supervision, whether it has been documented, reviewed, etc. Then we will have to take some samples of what they have done, reperform those to check whether they have done a proper work on that or not. For example, if a test of control on expenses needs to be done at 25 samples, okay, or 40, whatever, And that say take 25. We could possibly go and look at only 5 samples what they have done, and if you're comfortable that the internal audit team has done their work properly, then we can conclude safely in our work paper by taking copies of that and saying that the test of controls on the expenses are okay, proper in the company. And therefore we need to prepare those memos and notes in our file, but those are possible, and those things have to be done by taking into consideration our own re-performance levels and comfort on the work done by the internal audit. Okay, let's move to the next slide. Yeah, okay. The standard now tells also and warns us very clearly as to where all we should not use internal auditor, which is exactly what we saw in a slide before, as to where all they said you should be using different way. There was a positive notion given there. Now this is given a negative connotation. So standard is very clearly by saying that the team cannot use the internal audit in terms of working, or even direct assistance in that case, where there's a significant judgment involved, where there's a risk, where there's a higher ROMM involved, or any matters, for example, where internal auditors are already involved and they have found a problem and they're going to report it to management and doing it. We should not be looking at matters involving those topics again, because they already found the issue in area, and we should be looking at it independently or not relying on their work and their observations. Okay, let's move to the next slide. There'll be some examples here as to what we can do, what we can't do. So let us take some areas. For example, verification of statutory audit challans, remittances, test of controls in an area where ROMM is low, test of expenses details, physical verification of fixed assets, inventory where it is not complex. These are the areas where actually the statutory auditor can rely upon the work of the internal auditor. But some examples where there are huge amount of judgments like impairment, estimates, revenues, cut-off related matters, or testing of valuation is places where we should not rely, and we should perform our own independent work as a statutory auditor. Okay, I hope I'm clear. This is a very big difference and not generally followed by many of us, and I thought maybe I'll take some sufficient time to explain this in more detail, because if you in our own situations where we audit some companies where we believe that the internal audit function is very strong, we can actually go back, have discussions, read this standard and see and reflect upon and see how we can use it to our advantage. Okay, let's go to the next slide. That's an example. Well, the answer is also below, but the purpose of putting this is to essentially push the point to you in terms of when we can use the work of an internal auditor and when we cannot. So let's take an example of A Limited, and there are two processes. One is an inventory process, which is including valuation, and other is a staff welfare expenses. Now the engagement team, which is us, have identified that inventory is a very significant risk. Okay, there were 6 controls identified by both the internal audit team and statutory audit team on staff welfare expenses and also on inventories. Now the question is whether we can rely on the work of internal audit for both inventory and staff welfare expenses. Of course, the answer is very simple and easy in this example, straightforward. Since inventory is concluded as a significant risk area, a statutory auditor cannot rely on the work of internal auditor, but he can rely on the work of internal auditor on staff welfare expenses, both at a control level and substantive, and therefore his work would therefore be far reduced, and he can rely by re-performing some of the work of the internal auditor. Okay, now let's go to the next slide. In the first few slides, we also said that we can use internal auditor as a direct assistance. So what does it mean? That means that we can actually take the staff, employee, or the function and request them to do some work and report directly to the statutory auditors and rely on their work, and their work papers which they do would become the work paper of the statutory auditor, and therefore we can rely. But this is, before getting into this, it is very risky. When I say risky, it means that we have to first of all evaluate very clearly and document in terms of our objectivity, our competency level of the team, why are we doing it, obtain written communication from the client, obtain written communication on internal auditor. A lot of procedures one has to follow, and then get to it, because those documentation in our file are very, very critical. And therefore, this is something which is done very rarely, while someone can really do it in case they need a situation and that warrants a situation that they need to do a direct assistance from the internal audit function. But if they do that, then they should ensure that they communicate with the company in writing. They should communicate with the internal auditor in writing and enter into agreement why they are using them for and what kind of work they will be doing, and also review the work paper of those auditors as our own work paper and get a copy and keep it in our file. If we do that, then definitely we can use them in our own documentation and use that in our own files. Okay, let's move on to the next slide. So what are the documentation which is required? So as I told you, we'll have to assess whether there is a significant threat in terms of objectivity and independence of the internal auditor, and why do we want to believe them, who reviewed their work papers, and from our team who reviewed the work papers. All of that has to be mandatorily part of our files before we use internal auditors directly as our own staff for performing statutory audits. So this is very, very important, and I'll possibly pause here for about 5 minutes to take any questions from the team on these two students before I go to the next one. What is the process of getting questions?
No, it should be in questions tab if at all you have joined from a laptop. I'll read out. There is one question, sir. Shall I read it out? Yeah.
Yeah, please go ahead. More happy to answer. Yeah.
Statutory auditor has to share their workings or points or observation with internal auditor. This is one question from.
What is the question? Repeat. Can the?
Whether the statutory auditor has to share their working or points or observation with internal auditor.
Oh, no, not required. Not required. There is no obligation on statutory auditor to share his observation or share his outcome or findings with the internal auditor. Not required.
1 minute. So I'll just.
Hello, am I?
Yeah, you're audible. So 1 minute. I'll just copy the question.
Yeah. Yeah.
And put it in Excel sheet. I'm sharing it in Excel sheet. This one, the second question. Can I read it out, or else do you want me to read it out? Is my screen visible, sir?
Yeah. I'm able to see it. Thank you for that. Can the internal auditor plan the IFC testing with the external auditor and take up independent areas to ensure reasonable coverage of the process as a whole to arrive at an opinion on the design and operating effectiveness rather than reperforming the same controls? Plan the IFC testing with the external auditor and take up independent areas to ensure reasonable. I'm not too sure what does independent area mean. I'll try to possibly answer the question. If I not answer the question fully, please post a query back. I'll be happy to pull it out. See, the way it works in IFC is that internal auditor has to do his own testing, and when he does testing, he has to understand the process, identify key controls and what could go wrong in that control, and the mitigating factors and risk assessments. Therefore, that process and work he can do and have a discussion with the statutory auditor and have an alignment with the statutory auditor in terms of what he believes is right and what he believes is not. And therefore, the alignment would be in the nature of, for example, if there are going to be some 10 controls in a process like revenue. So internal auditor can say, this is my understanding of the process. These are things which can go wrong, and these are the controls I've identified. I won't test them. Do you have something differently? And statutory auditor can also look at the process independently. He has to do his own walkthroughs. He cannot say, I won't do walkthroughs. He can't rely on the internal auditor for walkthroughs. He has to do his own walkthroughs. And once he also gets a confirmation that these are the 10 key controls and these are the things which needs to be tested, then he can request the internal auditor to test those. And from that 10 controls, assuming there are 25 samples each, which he has tested, so 250 samples, the statutory auditor can do maybe 5 overall or 10 overall of the work of internal auditor and get a confirmation that he has done a proper work, reperform that work, get an assessment and that he is comfortable, and therefore conclude that that process is operating effectively. Okay, so the planning of the internal auditor to some extent will coincide and coexist along with the statutory auditor, but majority part in terms of walkthrough, understanding the process, identifying what could go wrong and controls has to be done by both of them independently. It is only the testing which statutory auditor can rely upon on the internal auditor.
These two are questions as of now, and if there is any, we'll be putting it up. So we'll continue with the session, or else how is it, sir?
Yeah, we can continue with the session. Or what is the practice? You give a break in between, or you continue the session?
Yeah, we'll be breaking by 1 hour or 1 hour 30 minutes based upon your things. So how do you want to have a break? Means we'll have a break now and we'll break up to 5 or 10 minutes.
Yeah, possibly we can take a 5 minutes break for everybody,
Yes.
so that they can, and then we can start the next topic if that's okay.
Yes, no problem. We can have a break now.
Okay. Yeah, we can have participants. You can just take a 5 minutes break, and we it's 5:50 now. At 5:55 we can reassemble.
Yes.
Thank you.
Thank you.
Should we start? Or possibly wait for one more minute?
Yes, sir. We'll wait for one more.
Sure. Thank you. Thank you.
So can we start, sir?
Yes. Yeah, we can start. Thank you. Okay. So
6:20.
sorry.
So we are done with 6:10, right, sir? We go on with.
Yeah.
Or else we are-
Yes. Yes. That's. Yeah. We'll go to the next one. Yeah.
Yes.
Is there any? Are there any further questions to answer, or we could go to the next one?
So we'll go with the next one. We have only two
Sure.
questions. Sir. As of now.
Thank you.
If
Okay.
Right.
Sure. Okay. Thanks and welcome again to everybody. The next standard which we will discuss is on SA 620. This is also a standard which we are going to rely upon somebody else's work. The first standard which we saw, we were relying on work of another auditor. The second standard which we saw was relying the work of an internal auditor. Now the third one is what should we do when we rely on the work of an expert. Now the biggest question one has to answer is who is an expert. We'll come to it in subsequent slides. But before getting into it, one has to understand that experts are various categories. One of the well-known example of an expert which we use in our normal routine audit is actuary, right? So actuary prepares a valuation report and using PUC method for either Ind AS 115 or AS 15, and then we take those numbers and then go ahead and then check whether those numbers match with the report he gives, and then we check whether the gratuity valuation, for instance, is appropriate, and then look at the assumptions he has used and disclose that in the notes as company. And as auditors, we get a copy of that report and ensure numbers are matching, and then ensure that disclosures are appropriate. Now the question from the standard 620 is that sufficient, or one has to do something for much more bigger than what it is? Okay, is that the only expert, or the definition of expert is beyond that? So let us dwell through these topics in much more detail. Okay, so now as an organization, an expert can be in two ways. One, the expert is within the company or within the audit firm or a third party as well. Okay, but whichever auditor is relying upon, that finally is the sole responsibility of the auditor. Auditor cannot call out anywhere in his report like 600 that he relied on so and so expert for framing his opinion on true and fair view of a financial statement. Okay, now let's go to the next slide and see the definition of an expert. An auditor's expert is either an individual or it can be an organization which possesses some expertise in the field which is other than accounting or auditing. That is very clear. Therefore, we cannot, as an audit firm, rely on another firm which in the same field of accounting and auditing and say he is an expert. So expert, because we are also equally experts, right, as auditors in accounting and auditing, and therefore this has to be in a field which is other than accounting and auditing, which is very, very clear. And as an auditor, we should be in a position whose work will be used in obtaining sufficient and appropriate audit evidence. Now, as I told you, this expert can either be an internal expert or external expert. So who is an internal expert? For example, if we are auditing a very large company like a Tata or TCS, or we're auditing Reliance, big companies, there'll be a lot of IT infrastructure in the company. And therefore, as auditors, we are required to rely upon the IT systems very heavily. It could be a general IT control reliance, or then followed through by application controls. So in that situation, whether we have to check access controls or management overrides in IT systems, as auditors, we may not be able to look at it completely. So within our own firm, we may have a set of IT specialists. Or the second one could be that there can be a situation where there is an extremely complex tax situation, where as auditors, we may not be able to form opinion. We may have to go to some of the tax expert audit partner or a tax expert partner within our firm. That could also be a situation where we can rely upon some others' work from a tax perspective. So these are some of the examples where we can rely upon within our own team, and they're also called experts. Now, external expert can be of two types. One, external expert hired by the company, or a third-party expert. External expert hired by the company is say an actuary. In case of an actuarial valuation for gratuity, the company typically hires him, and he is an expert whose final opinion I rely upon. So he becomes an external expert. There can also be situations where the company has a lot of litigations and claims, and there is a legal counsel. The legal counsel can be an in-house legal counsel or a third-party lawyer like AZB or whoever. So those lawyers to whom I interact and get their opinion and advice before I conclude on a provision for estimate or a litigation is also an expert. So expert in that sense is a very wide variety which is used by the auditor either from an in-house or it can also be a third party. Okay, let's go to the next slide and then figure out what an auditor is actually supposed to do. Okay, what is he supposed to do? He, in addition to what I said, in case of actuary, he should not stop by only getting the opinion of an actual valuation on his file. He should much more go beyond that and look at what is that which relates to with respect to his own ROMM assessment, and he should also be very much convinced that the expert has got the competency to do that work and document in his files very clearly of his discussions with the expert and also his assessment that the expert is valid and therefore he can rely upon. For example, in actuary, he should ensure that he gets his actuarial, whether he is actual actuary, registered actuary or not, have those conversations. In many situations, we may not be doing that, but that is required out of the standard. Standard requires us to assess whether he possesses the required skill set to form a basis opinion. So that is something which we should be doing, and whether the expert is also in one sense clearing the firm's QC policies and procedures, which is also very important. We should look at the previous work papers performed by that expert, see whether we can rely on them, the documentation and the data points given by him is adequate, or it's just one piece of paper where he gives, because the expert can need not be only in case of actuary, right? For example, there is a valuation on an investment, there is a DCF cash flow given, and there is a valuation of an investment done, and that valuation is based on some assumptions. So one has to clearly lay out what are the assumptions, growth path, the WACC rates, discounts, what is the cost of equity, debt adjustments, so on and so forth, and arrive at a value of the company. So we are relying on his work. So we need to be very clear whether we are convinced on his work and document all of that in our file, which is very, very important and very critical. Now, let us go to the next slide to understand as to these three sets as to what we already spoke in terms of expert engaged by the firm, an expert which is employed by the management, and a firm specialist. Let's move on to the next slide. Okay, so here if you see on this table, you would see those three boxes which I told you as to who can be the three possible experts other than accounting and auditing expert, right? So what is that we are supposed to do? We are supposed to ensure that the expert engaged by the audit firm are actually possessing the required skill knowledge, experience in that field, and we have to get that in writing or through inquiry. Okay, that is very, very critical. And this firm specialist, as I told, can also include IT specialist, tax specialist, an actuarial specialist. It could be a forensic in case if there is a fraud investigation, etc., happening in a company, or it could also be a valuation specialist who look at the valuations of the company, understand the overall methodology used in terms of valuation, whether it makes sense in terms of an impairment model, in terms of assessing whether the appropriate methods are used, so on and so forth. Okay, let's go to the next slide to see what are all those which we need to be doing and documenting in our file. Okay, the first point I told you, which is very clear, competency and capability of that guy. Second, you have to evaluate the objectivity of the entire work. Okay, if the expert is employed by the company, we have to very clearly evaluate objectively and very critically whether that guy who is being appointed as an expert is actually independent. Okay, because many situations the company employs an expert and the company negotiates the payments to them, and therefore we need to be sure whether the transaction between the company and the expert is at arm's length and therefore it is independent. Because if the independence is breached, then we cannot rely on the work of the expert and therefore we will be wrong. And therefore we have to do those inquiries with the managements and understand that he is actually independent. The third thing which we'll have to do and document is about inquiring with the expert, his engagement letter, understand the scope of work. It should not be a situation where the expert gives you a report, but in his engagement letter with the company, he has scoped out various things. He's got restrictions on work. He has got restrictions that he cannot see ABC, and therefore then you cannot then rely on his work because his work is very, very limited. And therefore we have to understand whether the scope of work given to the expert is actually full-fledged without any limitations, etc. Of course, the last one is knowledge. We have to ensure that our knowledge on the subject matter is appropriate and evaluate the work done by the expert. Okay, let's move on to the next slide, and we will link all of that what we told and spoke into a situation of an actual valuation. It's far more easier, right? So the first thing what we said, we have, while an actuary gives a valuation report, it is equally important for us as auditors to ensure that we go through the entire report, understand the method, for example, used, PUC method or otherwise, understand the assumptions used, understand whether the reports are in accordance with the standards, understand whether the assumptions and the computations used by the management gratuity plan is appropriate or not. For example, management can have a cap on gratuity, whether the cap is being applied by the actuary or not. These are the things which are the final responsibility of the auditors. And what is the data which has gone into actuary? The input data. If the input data is wrong, the output will be wrong. And actuary will not know the completeness of the input data because he will do the actuary run based on what he gets. So it is our job and responsibility as auditors to look through those input data and test whether the data given is appropriate, verify the data sent to the actuary, and also we should be checking number of employees are matching or not. So essentially the test work on the underlying data and the output, the sole responsibility falls back on us. And that is why I said how much ever we rely on the work of an expert, we cannot disclaim that in our report because we have to take full responsibility other than that expert work which he is doing in terms of coming up with a number on which we have to do our work in terms of inquiry, independence, so on and so forth. So we should not just stop by just getting an actuary report for our file. A lot of things we should do before and after that as well. Moving on to the next slide, there are things which we have to do in terms of evaluating the work done by the expert in terms of the standards beyond that, which is very simple. I'm sure this is something which all of us does in terms of checking the numbers, tracing back the numbers of the in the value actually report to financial statements, P&L, etc. But one thing which is very important here is that in some reports there could be caveats, there could be scope limitations. As auditors, we have to be very careful, read the entire report and see that there are no caveats, because the moment there is a caveat, which means there's a scope restriction, limitation, we cannot rely on that report. If we rely on that report, it will be a gross negligence on our part as auditors, and therefore we will be held accountable. So therefore, please, when we read the actual report, we should ensure that there are no caveats or any other limitations mentioned by them. Now let us go to the next slide and see an example. That's the company ABC Limited. It's a listed company, and the risk of material misstatement is identified on litigations and claims. This is the other example which I was talking to you on a legal counsel, which is an expert. In this case, the company has an in-house legal counsel and also they have an external lawyer. Now, the engagement team checked with the in-house legal counsel and obtained the list of all litigations, and those guys gave him a list. The external counsel never used to respond in the past, and therefore the engagement team did not even ask any data point or any independent check from the external lawyer. The question is whether it is right on the part of the auditor. Of course, the answer is no. If there is an external legal counsel, it is the duty of the auditor to mandatorily seek his views on all those litigations and claims if they are material, and ask him his outcome in terms of whether it is a possible case, probable case, or a remote case, and therefore make our own judgment whether it has to be provided or it will be a contingent liability or possibly nothing could happen. That assessment we'll have to do based on the external legal counsel's view. There could be situations where engagement team have written as auditors to the external counsel. External counsel may not have responded. In that case, we shouldn't stop at that. We should perform alternative procedures, verifying the underlying documents to form our view. And the simple point is that we should not only rely on the company and say that the company has given me a list of case, therefore I will say that there is nothing to be done after that. That should never be our approach under the standard. The standard clearly gives a responsibility and cost and onus on us to ensure that we go back, do our procedures in order, and then come back with the appropriate conclusion whether the amounts disclosed by the company in the financial statements are appropriate or not. We should also, as auditors, take written representation, letter of representation, confirmation from them, because that is very critical. But however, it is not a substitute for a third-party confirmation. So this is very, very important, because in many of our clients, practically when we look at the audit, we will have litigations which are big, which are crucial, and they would have appointed a lawyer. So we should definitely go back and do these procedures and have them on our files to ensure and support our outcome of the audit as a process. Now let us go to the next slide to also look at this topic in more detail. Okay, so if you take the same example of an external legal counsel, what are the things one has to do beyond whatever we spoke? If the matter is of a significant risk topic and it's extremely complex, then if the work has already been done last year, we should not leave it like that by saying that, okay, this case was there in the previous year, it's done same year, so we'll just follow the same approach of last year. No, we should not do that. We should roll forward our previous inquiries, have the inquiries again with the external legal counsel, check with them if there are any updates to the cases in the current year. The updates could be favorable to the company or it could not be otherwise also. So one has to look at all of that and then come to an opinion. There could be some very complex situations where the in-house legal could have a view, external advisor lawyer could have a view, and therefore the auditor may have to go to a second opinion on this topic. The second opinion expert can be by the auditor himself, or he can request the company to get a second opinion. But in some cases where it is a conflict between the legal expert and the auditor's expert, there should be a second opinion which is sought by the auditor, and the auditor should then take his own view based on the second opinion that is appropriate to go ahead with it or not. He should not just leave it like that by saying that in-house legal counsel has given a view, they are experts, I will rely and move on. That is not the approach auditor should follow. You should definitely get a second opinion and then take from there in terms of what he should be doing. If there are situations where a lawyer has resigned from the case and said, no, I won't go for it going forward, we shouldn't just leave it like that as auditors. We should be skeptical and we should inquire as to why he has left and then determine if something else needs to be done as procedures by auditors as well. These are the topics which one should really look at in terms of going through as an expert. So it doesn't just stop by taking the documentation provided by the client. It doesn't just stop there. We should go well beyond that, do our own inquiries and procedures, and be confident and comfortable before we conclude. Let's move to the next slide. Here it's a very extreme situation where management is refusing the auditor to either meet with the external legal counsel, or he is not responding properly, and if we are not able to take an opinion and a view on the topic, we as auditors can also consider whether we should bring it out in an audit report and issue a qualified opinion if the matter is very significant and it warrants attention of all the shareholders and stakeholders. And we should also get representations in writing in terms of all the possible litigation from the company, because we won't know as auditors the exhaustive list and the completeness of all the legal cases. So that is the responsibility of the company to give it to us. And we should also have adequate disclosures in the financial statements, and we should look at the overall internal control framework on this topic as well by the company. Okay, so with that, it comes to an end of this session on 620 as well. So possibly happy to take any questions on 620 or 600 or 610, and we'll open up for discussions and take suggestions and views as well.
Let's see. As of now, we didn't receive any questions on this standard. We'll wait for 1 or 2 minutes.
Sure, definitely.
So 1 minute. So this one question came up, so 4th question. Is my screen visible?
So yeah, what is the criteria to get a independent opinion from legal expert? Should be graded for all outstanding litigation? How will we apply materiality when the outcome is not known? So very interesting and very good question. Okay, the first point, as you rightly said, we'll have to apply materiality as a concept to all of these matters. And generally, in a case of tax or otherwise, there'll be a quantum which will be approximately available with the company in terms of possible exposure. There could be some situations, I can understand from your question, it could be either related to RBI, FEMA, where the quantum could not be identified or known. But if in the auditor has to make that judgment by himself, whether that matter would be a matter of significant importance given the size of the company, and whether it will really impact the true and fair view. If auditor believes so, then in his own right, he has a full right to request the company to get a third party independent opinion from the lawyer with whom they are anyway working. In many practical situations, those lawyers are the lawyers who have been employed by the company to fight for them, right? And therefore those lawyers will be willing to give their current situation of the facts and their opinion on this topic. It will generally not be a tough thing. But where it could get slightly more tricky is that there are no lawyers and only the company has their own internal legal counsel fighting for the case, and they say the case is not tenable and therefore we will win the case. But as auditors, if we have seen such situations in the past and we believe that there is a risk associated, auditor has a full right to approach the board of the company and request for a second opinion. And based on second opinion, auditor has to take a judgment whether it will form part of the audit report or it is appropriate to conclude with what the company is saying. But yes, materiality has to be applied, and in situations where the outcome is not known in terms of materiality, is a pure judgment area. Depending on case to case, the auditor has to take a call on its own. Okay, next question: how to judge the competency of an expert? Okay, no, very good question. So tough one actually in a practical situation, but the way, for example, I can tell you, in case of an actuary, right, we have practically seen situations where an actuary is not actually member of an actuarial board and still issues opinion. So it is our responsibility in that case to ensure to check whether he is actually a valid actuary, and ask him to share his membership number. That will at least determine that he is an he is an accredited actuary. That is the first step we can do in that situation. In case of situations like a valuation, right, there it will be very tough for us to check the expert's competency. That what we should do typically as auditors is do a discussion based on inquiry, understand if he has been the expert for last couple of years, go through his report and see whether they are in order compared to what we see in other clients. If not, then we should tell the client possibly we are not too comfortable and we should ask them to request them to change the expert. Or if we are comfortable, we should have a conversation with them, understand their background and their capability and competency over the call, and therefore get comfortable and document it in our files. Okay, SA 620. Why is the SA using auditors expert? External consultant is appointed by the management and auditor has no point in the appointment. Why is SA still called SA still calls consultant auditors expert? Okay, so the way the standard is actually evolved and developed is to say who are all the expert and auditor is essentially using the work of. It doesn't go ahead to determine to say is an internal expert or a external expert. End of day, he is an expert and auditor is using that expert. So the standard definition is using the work of an auditor's expert. So what all auditor should do when he is using that expert in his work, whether that expert is appointed by the auditor or by the company or external expert. So that's how it is structured.
So those were the questions are as of now. We'll wait for 1 or 2 minutes and then we'll close it up by 6:30.
Definitely, more happy. Yeah, sure.
We completed with the session, right? So we'll wait for 2 minutes. Thank you.
If there are no further questions, possibly we can.
Yes, sir. We'll wind it up. So the last one, does auditor need to agree in writing with experts report? It is a continuation of the previous question.
Does the auditor need to agree in writing with the experts report? No, auditor need not agree to anything in writing. No, not required. The auditor's requirement is to only get the copies of the expert report, understand it, have and not only just get the report and then take the numbers. Go beyond that, check the input which has gone, check the output, have inquiries, check their competencies and document them and ensure that it is appropriate. Auditor need not agree anything in writing with the expert report with the company or otherwise.
The same.
Does an auditor need to make a reference of expert report in the notes or report? No, not required. Auditor need not make any reference or should not make a reference, which is why I said the ultimate responsibility is on the auditors finally. As a process, like he is not an actuary or he is not an expert in valuing assets liabilities, for example, he is not an expert in IT infrastructure technology. Therefore, he is taking somebody's help before he forms an opinion on the financial statements. End of the day, the objective of opinion forming is with the auditor only, and he is only responsible. So there is no required to make any reference of that in the audit report or notes.
So that was the final question, sir.
Okay, so thank you so much. Thanks everybody, and my apologies that I couldn't come on a video due to some last minute technical problem. Hopefully we'll catch up sometime later, and thanks for the opportunity given. Hope the session was useful and informative to everybody. If there are any further questions later, please feel free to get in touch with me. Happy to have a conversation.
Sure, sir. Whatever the question that we get up, we'll write a mail to you, so you can respond to it.
Definitely.
Thank
We
you
can. Thank you so much.
for taking up the session, sir, on standards of auditing, these SA 600, 610, and 620. And it was excellent session, so thank you. Thanks for the time, sir.
Thank you so much, and thanks for the patient listening. Bye.
Thank you, sir.